With Pat Lopez, where we talk everything real estate. Today, my guest is Todd Valleau, managing partner of White Knight Capital. Todd, welcome to the show.
And for disclosure purposes, an investment advisor with Almanac Investment Partners.
Okay. And I do understand that these opinions are going to be your opinions. Don't go running out and say, hey, Todd Valleau told me to do this. So we do understand that, and we do want to disclose that. But Todd, what I want to talk about is what you're seeing in the market. Over the past year, we had a lot of volatility. We had a run on banks. We had 40-year high inflation. We had the Fed raising rates, the stock market up, down. People are really confused. They don't know what to do. So these are some of the topics I want to talk about. But before getting into that, tell me your story. How did you get started in the financial service industry?
Well, I wrote my sixth grade paper on working on Wall Street, only because I grew as a North Jersey kid. My dad was an attorney. A lot of his friends that I thought, were kind of the cool guys in his group, were all worked in Wall Street in New York. So I kind of always thought myself going that direction. Did my undergrad in finance. After finishing my undergrad, interviewed with all the big wirehouses, Morgan, Merrill, et cetera, and just determined in my mid-20s I really wasn't ready to kind of jump down that road.
Right.
Found myself in the banking industry in finance and lending. Until the banking industry got a little wobbly. 2007, as you remember,
Yes, it did.
was a little bit of a banking correction,
Correct.
and especially in pertaining to lending. So in 2008, moved into what I always wanted to do, which was traditional financial planning and wealth management. Started my practice at Northwestern Mutual. 2012, moved my practice to Penn Mutual. And in 2018, launched my own firm, White Knight Capital.
Okay. So you've been at White Knight Capital now for 5 years or so? Okay, perfect. Okay, so let's jump into the financial markets. So as far as the stock market, what are you seeing there? Are we going to be flat? Are we going to have a big correction, a small correction? Are we going to maybe end up? And once again, I understand this is your opinion, but what are your thoughts? What do you think?
My personal opinion, is we're basing most of our models that we're going to have a generally small up year. I think we have models, in my opinion, based with the S&P finishing somewhere around 4,300 for the year.
Okay.
But we are conservative in nature across all models at the moment. I mean, I think to get there, we might see a significant or sizable correction with hopefully a rally at the end of the year. It's really going to be dependent on the Fed, interest rates, and where inflation goes.
Okay.
And do we kick ourselves into a true recession or not?
Right. So if you had the crystal ball here, you'd be a multimillionaire, right?
I probably wouldn't be sitting here.
You wouldn't be talking to us right now. Exactly. Okay. So you think the market's going to be, a little rocky, but, maybe we'll finish up at, towards the end of the year. Does that sound about right?
That's what our expectations are, and we built into our models. Yes.
Okay. Very good. Now, as far as the Fed, I know nobody can predict what the Fed's going to do, but what are your thoughts there? They're talking about maybe one more increase and flat after that. Other people are talking about, some cuts. What are you thinking?
Well, the yield curve is predicting, one more rate hike of 25 basis points, followed by a flattening, and then a cut later in the year. As I alluded to earlier, I'm not really sure that I believe that we're going to see cuts unless inflation really seems like it's rolled over. Inflation's a tricky thing.
Right.
For 10 years, the Fed tried to get inflation up to 2% and couldn't do it.
Right.
Now suddenly inflation tops out hitting, 8%, and they can't figure out, they can't just put it back in the bottle that quickly.
Right.
It's something that's going to take some time. So rate cuts by the end of the year. It's going to take something more significant to happen to make that be the end result of where the Fed moves. I think they'll hold them higher for longer.
Okay. Now, as far as your clients, and this is really where I want to, just try understanding the mindset, because, spending is, 80%, 70%, whatever the number is of our GDP. So what is the mindset? Are more of your clients bearish? Are they bullish? Are they somewhere in between? What are they telling you?
I think as a frame, cautious is where I would probably frame the majority of every client is different individual. They all have different risk tolerances, goals, objectives, time horizons. But cautious, if you just wanted to frame and term one word across the board,
Okay. Now,
Cautiously optimistic.
right. Now, as far as if somebody is nervous, they're an absolute bear, they think the market's going to crash. What are some of the things that you're doing now that we're in a higher interest rate environment?
Well, as I alluded to, we all models and portfolios are braced for more volatility in the near future. So that's across the board. Some clients have even pushed that further down, moving down one full class of model to a lot more be more conservative.
Right.
And then for new money, clients that are just don't even want to do traditional investing. As we alluded, the interest rate environment's changed.
Right.
We have short-term interest rates are up because of the Federal Reserve rates. We have CDs and treasuries, yielding between 4, 6, and 5%. So as long as you keep these items, these products, these short duration, you can avoid interest rate risk and duration risk.
Right. And then that's what happened with Silicon Valley Bank. They had money tied up for 5 and 10 years at low interest rates. And then when they turned around and they needed cash, they had to sell it for, 70 cents on the dollar on there.
So that's the some
Right.
nature. They held
Yeah.
longer duration treasuries. You don't have to mark those to market on your balance sheet, but if you do have to sell them because people want their deposits, you got to sell them at whatever the price the market will yield, and so you got a bank failure.
Right, exactly. Okay, so some of these rates that you mentioned, in the fours, almost 5%, they're for CDs and treasuries that are, super safe, right?
Yeah, but they don't have any market volatility.
Right.
You get rid of the interest rate risk through just using short duration. So stack 3, 6, 9, up to 12 months, and just keep rolling them over in a stacked ladder, so you can maintain the liquidity position in the account, pick up a yield, but you're not picking up any of the market volatility in those type of strategies.
Okay, and then you have a lot of people doing that because that seems pretty, pretty safe.
That's pretty much where most new money is right now. It allows us to, open an account or get some money earning, but with the idea that let's see where markets go, let's see where the Fed's going, let's see where the data is on inflation,
Right.
and then maybe we'll look for the opportunity that
Right,
we
some
feel,
blend, yeah,
look for
exactly.
the opportunity we see possibly later in the year.
Okay. Now, as far as your clients, when it comes to real estate show, this is a real estate show with Pat Lopez. What are they talking about, if they are at all? Because a lot of people are buying vacation homes, or at least they were. People are retiring and want to move. And if I have an interest rate at 3% and interest rates now are 6 to 6.5%, are people putting things on hold? What's that conversation like?
Well, I mean, the higher interest rate environment makes the debt service or the decision on buying a property different.
Right.
But historically, if you look at the last 60-year trend on interest rates, it's roughly around 7%. So
Right.
we are below historical averages.
Right.
Real estate historically yields a 4% rate of return. That's past performance is no guarantee of future results, but things do trend on certain lines. If you're a long-term real estate buyer, and whatever that piece you're buying in your plan is for a long duration asset,
Right.
it should be a profitable add to your overall portfolio.
Okay. And then there's always this question, and it's not just now, it's always been, should I pay cash? Should I put a large money down, or should I put less money down and invest? Are you having those conversations? I mean, you've always had those conversations because that's always been a topic, but is there any difference today in that conversation versus, a couple of years ago?
Well, I hate to give blanket advice because every person's and every client's situation is different. And the financial gurus that come on the shows and give blanket advice,
Right.
I always hate that.
Right.
But right now we have mortgage rates that are a little bit higher. So I get that there's more debt service. I mean, when you look back to 2021 and you're looking at interest rates in the 2 to 3% range,
Right.
leverage it all.
Right.
It's guaranteed to be long-term cheap money.
Right.
Now maybe not leverage as much. Maybe put a little bit more down, but I do have concerns with someone just paying cash if it's going to eat so much into the liquidity of your financial plan that creates your problem.
Right.
If you have $500,000 and you want to buy a $500,000 account, what's your liquidity position if you write a check?
Right.
Why not finance some of it? Maybe pick up some treasury yields, some CD
Right.
yields, and probably build yourself a more solid financial plan that you maintain the liquidity position in there, but still finance a portion of it.
Right. And that makes sense. So if I put some money in the strategy of CDs and these treasuries that I'm getting, 4 or 5% on those, and I have that liquidity because they're turning over every 3 months or so on there. Now I'm not tying up all my money, because with a home, if I have it there, I either have to sell or I have to refinance, and I have to be in a position to be able to refinance. So it's not a guarantee to pull that money out.
It's like everything
Right.
in your financial plan. The answer usually ends up with diversification of some sort.
Okay. That makes sense. Okay. As far as just in general, is there anything else that you're seeing or that you're talking to clients about that the show should know about?
Not so. To form that into more of a
Okay.
detailed question.
Well, I mean, as far as let's tie it to real estate. So as far as buying real estate right now, you're not against that. People have to live somewhere, right? And you have that, natural appreciation over time. So, that's a no. It's not saying, hey, don't do that now, right?
Well, if the property is going to be your primary residence and it's a longer term hold, you have to live somewhere.
Right.
You can't. Well, I guess you can rent if you want to hold on the market. But again, going back to real estate appreciation over a longer duration, even if we do have a small, somewhat correction in the housing market, and you're a long term holder, it should be arguably a profitable part of your portfolio, as long as you have duration in that decision.
Okay. So, right. So it's time on there. And of course, everybody's situation is individual. So everybody's a little bit different. So there's not one blanket rule for everybody. Okay. So, great, Todd. I think that was some really good information. I really like the treasuries and the CDs. I just didn't realize the rates were that high. I'm used to my bank getting 1%, if that. On there. So if people want to get a hold of you and just, talk about some strategies and just get your advice, how would they do that?
Probably the easiest way would be whiteknightcapital.net. That's our website. All our contact information there, and disclosures, other email address, etc. So whiteknightcapital.net, www.
Okay. Well, Todd, thanks for being on the show.
You bet.
Once again, some really good stuff that you shared with us. And that's the Real Estate Show with Pat Lopez. Now, be sure to follow the show on Facebook and Instagram and subscribe below. Super important. I have some great guests, some great topics that we'll be covering. Also, leave a comment. Tell me some show topics you want to see in the future. Remember, this show is everything real estate, no limits. Hope you enjoyed the show and have a great